Live from Bloomberg headquarters in New York, I'm Scarlett Fu.
And I'm Alex Steele. We are kicking you off to a special early edition of The Close with the U.S. closing bell coming to us in an hour. Guess what, Scarlett? There's a record high.
Yet again.
Did you know this would be the 33rd closing high record for the S&P, up 0.3%. Guys, I'm saying it. It's a bad news, good news situation for the overall market. Paramount also moving higher on that bid from Skydance. You have money moving into the bond market, though, as you get that weaker ISM. We'll get to that in just a moment. And continuing that dollar-yen watch as that stronger dollar just continues to pummel the yen. It feels a little bit as steady as she goes, though.
Yeah.
In the narrative.
But the gains in stocks and bonds attributed to more signs of a U.S. economic slowdown. New data show a growing number of people struggling to find a new job. The services industry is shrinking and factory orders are falling.
And Zelenskiy to Trump, show me your plan. Ukraine's president tells Bloomberg he is potentially ready to hear Team Trump's proposal for ending the war with Russia.
A critical next few days. President Biden gets ready to reassure Democratic governors, campaign in swing states, and sit down for a one-on-one interview. This as the White House denies a report he is considering whether he can recover from his disastrous debate and that he should keep running for re-election.
All right, well, let's get the latest here. The latest headline crossing is that House Democrats consider demanding President Biden withdraw from the race. We want to get more right now with Bloomberg's Jordan Fabian, who joins us. Can you walk us through this latest headline here and how we got here?
So, yeah, there's been mounting concern among Democrats of all stripes, but especially on Capitol Hill, about the damage that President Biden did to his candidacy in that Thursday debate. And so you have now dozens of Democrats considering this letter, pressuring Joe Biden to resign. You know, so far, there's only been one House Democrat who said publicly that Biden should step aside. So this would represent the dam breaking up on Capitol Hill among Biden's allies.
Yes, but President Biden, of course, still wants to stay in the race if he can. And there's a lot of pressure on him to deliver the next couple of days. He's meeting with Democratic governors. He's also going on some campaign swings.
That's right. I mean, he's got to prove to not only his allies, but the American people that he's up to another 4 years in office. So you're finally seeing Joe Biden do things that he probably should have been doing, frankly, the day after the debate, which was do more rallies, sit in front of interviewers, talk to the governors and lawmakers he needs to stay on side. Because the concern among Democrats isn't just about losing the White House to Donald Trump, although that is their primary concern. It's also about losing the control of the Senate and the House and having a Republican trifecta in Washington, which would essentially allow a rubber stamp for Donald Trump's agenda should he become president in 2025.
Yep, exactly right. All right, Jordan Fabian, thank you very much joining us from Bloomberg News. Also looking forward to that George Stephanopoulos conversation on Sunday with President Biden. All right, let's stay with politics. And as the war in Ukraine marches forward, its funding being supplied to the country remains a big issue here in the U.S. in the lead up to November's election. Presidential contender Donald Trump has repeatedly said he could end the war in one day if elected. Bloomberg's Annmarie Hordern sat down in Kiev with Ukrainian President Volodymyr Zelenskiy for an exclusive interview.
We've had agreements about ceasefire between Ukraine and Russia, and Russia has been always breaking all the agreements and has been killing our people. So only if it's on some international forum in the presence of the countries, leaders who are trusted. They might have different ideas, different views on the stages how this war will be over, but we all have to be on the same side. We have to trust each other. Trust is very important. The Peace Summit, by the way, has shown that we can follow this plan. Over 100 countries were there, and today we're talking about their nuclear security and energy security, and there will be a clear plan. So the ceasefire also needs a clear plan. We must understand that Russia would not be using ceasefire to simply accumulate equipment on the territory, our territory that they've occupied, because we will not be striking them. I mean, they can use that to create a strong fist here and then accuse us of breaking the ceasefire and start another invasion. So it's really complicated for us. It would take a significant loss for us if they invade again, as in the beginning of 2022, when they have almost reached the capital city. And they accumulated a lot of equipment on the territory of Belarus. And Belarus kept saying that, no, it's just the exercise. No occupation is in mind. It's just the training. It's just military games. It's very important. I really don't want to have this big trouble for my country, because we are at war already. Giving the advantage to Russia now, it's just impossible. We need to be smart. And it's important also who will be responsible for this, besides the Ukrainians who are paying with their lives. Which country will be responsible? It's easy to just talk about ceasefire, but it's very difficult to enforce it, to keep it. It's very difficult to find those who will respond why the ceasefire
But we're going to see
broken.
more calls for a ceasefire, especially as the world politically is moving to the right and potentially moving to the right in the United States. You have said this war is dependent on U.S. aid. I want to ask you, did you watch the presidential debate between Joe Biden and former President Donald Trump?
Передусім.
So, first and foremost, the ceasefire is an important element in any plan to finish the war. So, a ceasefire is not finishing the war. We've been there. It would be just a frozen conflict. And it would be frozen for the aggressor, it would be frozen on our territory, and our people would be under the occupation. This gives a clear advantage to one side. That's why it's easy to offer different proposals of ceasefires. But what's important? It's important to find answer what would come after. It's the matter of not just the victory. There are many people talking about ceasefire, and it's fine that people are talking, but what would happen next? That is the question. For example, what's the next step? What's the third step? What would be the step when Putin breaks the ceasefire? After the ceasefire, a month after the ceasefire, will he pull out the troops out of Ukraine? Who guarantees that he will pull the troops out of the occupied territories? And there's silence. Nobody has answer. I'm not accusing. I just want to explain that we are at war and we understand this. So, the debates.
Well,
I saw
because
debates.
the answer of how this might all unravel will depend on also who's at the table from the United States.
І, зокрема, буде залежати.
Amongst other things, it might depend on who is the president of the US. Yes, that's a fact. Because the US, the United States of America, today are probably the most powerful player. So the matter whether the United States would be the major international player, whether they want that, or they want to focus more on their internal politics. I cannot say, it doesn't depend on me.
So did you watch the debate?
Yes, I watched the debates. So, first and foremost, I want to say, I don't know, maybe it would be out of tune to what we see in the US media, but I watched. And we are not electing the president of the US, so I didn't look at the incumbent president and the former president. I looked at them in terms of Ukraine.
President Trump said he'll end the war before he's elected.
Yeah, I heard
What do you
that.
make of that?
Я скажу чесно.
Let me be frank.
Давайте, наприклад, це вирішує.
For example, well, the decision is on US public. But let me just have some reasoning. Так, але для вас це важливо. Yes. So let us imagine that the winner might be Trump in November. And he knows how to end the war. He has a plan. Me, as the president of a country at war, not a theoretical person, but a real-life person, I would like to be prepared. we are 40 million. We're a big country, and we really depend on the aid from the world. And we depend on the aid and the position and the stance of the US. So I would like to understand, what would it mean to finish war fast? Tomorrow, do we want the war to be over tomorrow? The war didn't to start. It was Putin who started it. But I hope you agree that it would be fair. If Trump knows how to end this war, he should tell us today. Because if there are risks to Ukraine's independence, if there are risks that we will lose the statehood, we want to be prepared for this. We want to understand whether in November we will have the powerful support of the US or we'll be all alone.
That was Ukraine President Volodymyr Zelenskiy speaking exclusively with Bloomberg's Annmarie Hordern, who joins us now live from Kiev. And Annmarie, Ukraine will be on the top of the agenda next week at the NATO summit. Luckily for President Biden, it will be held in Washington, D.C., so he won't have to deal with international travel and time difference as he tries to convince the Democrats as well as the public that he should not drop out from this presidential race.
Yeah, that's right. And we did speak about NATO as well. It seems that Volodymyr Zelenskiy is excited about a potential invitation to join NATO. He says that will really set the tone in terms of their security. He needs this security desperately, not just the weapons, but he wants the security. And almost what other people will tell you behind the scenes is to Trump-proof some of the aid and some of the signals we are seeing from capitals, Western capitals around the world before the November election. Obviously, we spent a great deal of time on the November election because that has reverberated not just in the United States, not just in the halls of Congress, but in the capitals in Europe and around the world, as President Biden is facing mounting pressure now to step aside for a younger leader within the party. When I pressed Volodymyr Zelenskiy about this, he said, of course, he watched the debate, but he was interested in what everyone was saying about Ukraine. When I asked him, he spent so much time with President Biden over the course of this war, more than 2.5 years. Did he see a deterioration of his health? He didn't want to get into it. He wanted to be gracious about the current president, who's been very supportive of him. But he did try to say potentially this has to do because of it's different in the light of media than when you deal with people in other settings. But when I asked him, he's 46-year-old, I said, could you do this job at 81? He laughed. His facial expression said it all. And he said, oh, I don't know. And he said, there's a lot of things to really consider at that age. Who's the team around you? Are you in good health? And of course, what's the situation with your country? Ukraine at the moment is at war. America is not.
Annmarie, the latest headline here in the U.S. is House Democrats considering demanding Biden withdraw from the race, talking about sort of closing ranks, which world leaders did do at the G7. And I'm wondering how that sets us up then for NATO.
Well, it'll set us up for NATO in the sense that whatever the Biden administration does, the potential is what happens next year. Is it a Kamala Harris, a current governor, Gavin Newsom, Gretchen Whitmer, showing up to the next NATO summit, or is it Donald Trump? And we saw this at the G7 to potentially try to Trump-proof U.S. support for Ukraine. They signed a 10-year bilateral security agreement. This is why I got the sense that Volodymyr Zelenskiy really wants to get in a room with the former president. He doesn't want to do anything that's illegal or that's not proper in an election year. But the fact of the matter is this is an existential crisis for Ukraine. And they need to know if when Trump comes out on the debate stage and says, I can solve that conflict before I'm even inaugurated, he wants to see that plan. So he said potentially, yes, he is ready to sit down with Donald Trump.
All right, Annmarie, thank you so much. Appreciate it's late there. Annmarie Hordern live from Kiev. All right, up next, we're going to get insight on today's market as yields fall. On weak U.S. economic data, stocks up. Our guest is Calvin C., head of America's macro strategy at BNP Paribas. This is Bloomberg. You've heard it before. Bad news is good news for the equity market. Record highs now on the S&P. Calvin C. is head of America's macro strategy at BNP Paribas and joins us now. That weak ISM services data really catapulted the S&P to yet another record high. How long can bad news be good news and continue on this record run?
Thanks for having me. I think what's going to be really important this week is going to be the non-farm payrolls number that we get on Friday. The ISM services number sure was jolting, but the thing to note is that ISM has been a pretty poor predictor of the economy over the last year. As we know, late last year, the ISM prints were below 50 for much of the second half, while the U.S. economy was growing near 4%. So I think the market's focus really is on the NFP number, and if the NFP number is also weak, I think it's going to wake the market up and be a pretty bad shock for the market, although, again, that's not our base case expectation at the moment.
Okay, you say it could wake the market up, but it could wake the bond market up a lot more than the equity market. Why is that, Calvin?
At present, our forecast for payrolls on Friday is to see some moderation from the really hot prints that we've seen. We expect 175,000 jobs to be added to the U.S. economy in June, and we expect the unemployment rate to hold steady at 4%. That being said, I think that there are asymmetric risks to the fixed income markets around the print on Friday. And what I mean by that is I think that the bond market is going to move a lot more on a weak print than it would move on a strong print. And the reason for that is exactly what you just said. The data that we've seen over the last few weeks is looking a bit softer. The ISM print, the recent jobless claims numbers, spending in terms of retail sales. So if we also see a weak payrolls number, what I think it's going to do is it's going to spark some more debate in the market as to whether we're simply rebalancing in this economy, which is what the Fed believes, or we're cooling more rapidly.
Mm-hmm. And we're still waiting for that steepener to really take hold and continue, right? I mean, you're looking at buying really across the board, but really in the back end today, do you think we're going to get that steepener on a sustained basis, and is it a bull steepener or bear steepener?
If we do indeed see a weaker than expected payrolls number, what I think is going to happen is I think that the markets are likely to price in more rate cuts in the front end of the curve. And in particular, we're positioned in a way that would profit if the markets price in more rate cuts for 2025. At present, the markets only have about 90 basis points of cuts. But if we do move to a scenario where the markets are worried about a harder landing of the U.S. economy, and with the markets pricing in a pretty lofty terminal level for the Fed to end their rate cuts this cycle, we think that the markets could easily price in more. If the markets are pricing in a deeper path of cutting in the United States, what that would mean is a sharper rally in the front end of the curve and a steepening of the curve, but a bull steepening.
And very quickly here, Calvin, you also say beware of Japan coming in to intervene and perhaps do something about the yen.
Exactly. So what's really notable over the last few weeks is that the yen has continued to weaken and weaken and weaken. But the yen's weakening has largely been on the back of positive currency fundamentals for the dollar. And what I mean by that is because the U.S. economy has still been okay, because U.S. yields have still been significantly higher than those in Japan, that differential in yield has continued to strengthen the dollar vis-a-vis the yen, i.e. the yen has been softening.
Yep.
Japanese authorities are not happy about this, but they haven't come in to intervene. And what we think they're waiting for is an opportunity to intervene at the same time that the fundamentals are changing, i.e. if payrolls are weak and U.S. yields are already falling, which should be supportive of the yen, we think that they're likely to think about using that opportunity to intervene, to add fuel to the fire, to really get the yen to strengthen a lot.
Okay, so a lot to watch for in Friday's NFP numbers. Calvin, thank you so much for joining us today. Calvin C. is head of America's macro strategy at BNP Paribas. Coming up, Sherry Redstone hitting the break button on its talks with Skydance Media. We'll have the details of the preliminary agreement to merge with Paramount next. This is an early edition of The Close. Time now for our top calls to look at some of the big movers on the back of analyst recommendations. And we start with Tesla. Price target raised to $300 at Wedbush, which keeps its outperform rating after the EV maker posted better than expected quarterly deliveries. Analyst Dan Ives calls it a major turning point for Tesla after a very choppy start to the year. Shares up 5.5%. Next up, Permian Resources, an upgrade to outperform after the oil and natural gas company from BMO Capital Markets. Increased scale in the Delaware Basin and the company's acquisition of Earthstone Energy has led to an improved multiple and strong operational performance. shares up about 2%. And finally, Charter Communications, Citi downgrading the telecoms company to sell following the FCC ending the Affordable Connectivity Program on June 1st. The analyst says the move is likely to exacerbate broadband subscriber revenue headwinds over the next year. Shares marginally lower right now. And those are some of our top calls.
All right, let's stick with media and go to Paramount. Skydance Media reaching a preliminary agreement to buy Sherry Redstone's National Amusements and merge with Paramount. I feel like I've heard this before, as according to sources. Joining us now for more is Bloomberg's Felix Gillette. Okay. Is this the same bid as before? Is it a different bid?
It's a different bid, although exactly what's different, we're not sure yet. But, this deal has been on again, off again for 7 months. It's now on again for now. And the question is, what changed in Sherry Redstone's mind from a couple weeks ago when she walked away from the deal with Skydance?
So she could walk away again. This is entirely dependent upon her, right? What are the other shareholders saying?
Well, now I think the next step is it's going to go back to Paramount and the committee on the board to decide, are they going to approve this again under the new terms, if there are new terms. And then, the question is, there's always been concerns about potential litigation from other shareholders who were initially upset about some of the previous terms that were, came public. So, there's still plenty of variables that could go right here.
So do you think that the lawsuits will crop up again, or the threats of a lawsuit, I should say?
I think one of the things that's different this time around is now there's a 45-day window where Paramount could consider other potential bids. And I think the inclusion of that 45-day window is maybe included to lessen some of those concerns from other shareholders. But will other bids materialize? This is, again, there's basically been a for sale sign on this company for 6-7 months now, and people have been kicking the tires, looking at it potentially, but no other really serious bids have come forward.
Okay, no other real serious bids have come through, but very quickly here, who are some of the ones who might come through just playing along here?
Edgar Bronfman Jr. and Bain Capital have been interested. Previously Apollo and Sony were looking at it. Byron Allen has, been looking at the deal. So there's potential people out there. Barry Diller has been now rumored that he's interested with IAC.
Felix probably has like a massive whiteboard with
is.
arrows and stuff. There's
and
no other way you can do it.
It's one of those crime scene boards.
Yeah, it's super real.
It's a very ugly crime scene board. All right, Felix Gillette, thank you so much, covering the latest in the world of media and what's going on with Paramount. Coming up, Hurricane Beryl takes aim at Jamaica as the country's prime minister declares the entire island a disaster area. We're going to have the latest on the storm's destructive path in the Caribbean. That is next. This is an early edition of The Close on Bloomberg. It's just about 3:30 p.m. in New York. Oh, actually, you know what? It's not.
It's not.
It's almost 12:30 p.m. It's because the market's closing early. This is the countdown to the close. I'm Scarlett Vu.
Yeah, I'm Alex Steele. We got a data dump this morning. We still get the Fed minutes coming out at 2 o'clock. So there's still a lot more news flow to digest over the next couple hours. We'll be here for that. We are also taking a watch on Hurricane Beryl, which is making its way all throughout the Caribbean. Jamaica's prime minister declaring the entire island now a disaster area as Hurricane Beryl spreads destructive winds across the region. Now, the storm could cause more than $1 billion in damages as it moves west through the Caribbean. There's also a risk now that a weaker Beryl could spiral into the Gulf of Mexico next week. Joining us now is Chuck Watson, president and founder of ENKI Research, which specializes in disaster modeling. He's the guy that I go to every time there is a natural disaster because he can crunch those numbers to give us some perspective on what we're looking at. Chuck, just how bad could Hurricane Beryl be?
Well, it's important to remember it's already been through Grenada and the Grenadines, and I like to use percent of GDP because you think about $1 billion storms. Well, as you know, we've had 11 or 12 billion-dollar storms here in the U.S. this year, but for these small island nations, it's particularly devastating. As the Jamaican Prime Minister says, the whole island. So you look at Grenada may have lost, believe it, this is unbelievable numbers. They may have lost 50% of their GDP in terms of damages in just a few hours.
Oh my gosh.
So when that's, you got to put things in perspective for the region. And you look at Jamaica, we've been on a knife edge on this storm because it's decreasing in intensity. In fact, I just looked the fix from a few minutes ago. We get data so rapidly now that I can almost tell you real time what the storm is doing. And so the latest position fix and intensity estimate from a few minutes ago, it's down to about 115 miles per hour. The problem is it's wobbled a little bit to the north, which means it's closer to particularly Kingston, Spanish Town, Negril, that area. So right now we are still looking at around $1 billion worth of damage. And again, put that in perspective, that's 6% of Jamaica's GDP. The worst storm the U.S. has ever had. You look at things like Katrina or the really bad 1886 storm that hit the U.S. East Coast. It's less than 1% of our GDP. So just put those in your chart there with Katrina, Harvey. Those are all less than 1% of our GDP. So we're a big nation. It doesn't affect the whole country at once. And as catastrophic as it is, we've got the resources to deal with the aftermath. These small island nations, it affects the whole country and is a huge hit out of their economy.
Thank you for putting that into context. It's easy to forget when you're looking at the actual dollar amount because it's not in as a proportion of the overall economy. Storms like these, compact storms that hit small island nations, you say they can cause social and political instability that takes years to recover from. Can you elaborate on that?
Yeah, because you look at Jamaica as a great example because in 1988, Jamaica was hit by Hurricane Gilbert, and unfortunately, Beryl has some similarities. Gilbert was a stronger storm and a direct hit, but it also ran lengthwise and affected the whole island. And it caused at least a decade, if not two, of political instability from, these islands are in a bit of a bind because if you have a bad storm, and I mentioned Negril, the resort areas, Ocho Rios, Montego Bay, people are familiar with those. People hear, oh, bad storm, there's cancellations, they don't go back for a couple of years. It's devastating to these economies. So what tends to happen then is you lose jobs. You do have external support coming in, but then, how does that get distributed through the economy? Very complex questions, and it does cause social problems because people are out of work, they have no hope, they've lost their homes, they're waiting to get aid, and it can very easily create a volatile situation. So again, with Jamaica, it was a good 10, 15 years after Gilbert before they got back on their feet. Right now, they're politically pretty stable, and so hopefully that'll get them through.
Chuck, what we did know is we were very alert and aware of where the hurricane was going, how strong it was, where it was coming from. Like, the data was really fast and ready, as you mentioned. What's the preparedness and the prevention like on the ground in a place like Jamaica or Grenada?
It's actually better than you might think. During the late 1990s and early 2000s, one of my first projects was with the Organization of American States and CARICOM, the Caribbean Community. We did advanced disaster plans for Jamaica, Grenada, for all the islands. In fact, it was part of something called the Caribbean Catastrophe Insurance Project. And so the basics are there. They've got evacuation maps. The problem tends to be communications. And they have a similar problem that we have here is trust in government emergency officials. I heard an interview yesterday with some folks in Jamaica. They're like, we get these warnings, we'll see what happens. And, we just wait till the last minute. I can walk down the street here in Savannah, Georgia, and if we had a storm coming in, you do that exact same interview and the exact same response. So they face similar problems, but the plans are in place. The emergency response is in place. The problem is, again, I think we tend to forget here in the U.S. when we're thinking about disaster aid that it's not like a state here that gets hit. It's the whole economy, the whole society that gets whacked by these things.
Absolutely. So going forward, Chuck, given that this is a fairly early hurricane of a storm this size to hit during this hurricane season, how would you advise governments, emergency responders to prepare for what will likely be a very active hurricane season?
Yeah, and actually I would start, Scarlett, by saying that the big thing is what individuals can do as people, as companies. The first thing you can do is obviously make sure your insurance is in place, your insurance is up to date. Have a plan, know what you're going to do. Understand your house, your business, how good is the structure. Have a plan also, not just for a weak storm, but also if it's going to be a Cat 3, Cat 4, well, you may come back and there's nothing left but the foundation of your business. I mean, literally just a bare concrete slab. So what are you going to do in that circumstance? How are you going to take care of yourself for the first days to weeks after the event? Because it takes time, even as well as we try to plan as emergency managers, it takes time to mobilize resources. So you are your own first responder. So,
hey, Chuck.
Yeah.
To that point, though, what happens if your state or you're not offered insurance? It feels like California and Florida are getting so weary of that. It's very hard to come by or quite expensive.
Yeah, and that's a great point, Alice, because that's exactly what we're facing here on the Georgia coast. Almost all the places along the coast, and state governments are scrambling. For example, Florida has their catastrophe fund, and they have a semi-public-private insurance entity to try to provide coverage in these areas. So states like Florida, I believe Texas has a similar plan. They're trying to pick up the slack from the traditional insurers, but other states, and again, Georgia's an example, South Carolina, don't have these backup plans. And so again, you have to do what you can, and with inflation and the economy being, you obviously get into arguments over that, but you really do have to try as best you can to plan around that environment. Now, for flooding, the federal flood insurance program, FEMA, the flood insurance program, if you're anywhere near a flood zone, you need to have that insurance. It's relatively inexpensive, and it will protect you against flooding, which of course isn't covered by commercial insurance in the U.S. So that's a no-brainer. If you're in a hurricane-prone area, or if you're even inland where you get regular river and street flooding, you got to have the FEMA insurance.
Very well said. Chuck, really appreciate your joining us. Chuck Watson of ENKI Research. And I know that every time someone's home insurance premium goes up, Alex, you call the broker and see what you can do, what adjustments you can make to bring down that premium. And one thing they always say is, oh, well, you can increase the deductible in case of a hurricane. It'll be 2%. But I mean, that's a huge, big number.
And this is so interesting, too, is that as climates do change, the disasters that you may be used to also change.
Yes.
So maybe you have wildfires in different places that wouldn't have normally happened, or now you're dealing with floods in places that wouldn't have normally happened.
Floods in California, for instance.
Yeah, and that makes it really difficult then for your home insurance to actually reflect the crises that you're facing.
Yeah, so if you're an insurance company, raise the premium. That kind of covers you on all bases, right? Okay, coming up, we're going to talk about Southwest Airlines because it's trying to guide activist investors to the nearest exit. We're going to have the details of its poison pill plan to defend its leadership in today's Stock of the Hour. This is an early edition of The Close on Bloomberg. Time now for our Stock of the Hour, where you're watching shares of Southwest rising the most in 2.5 weeks. The airline adopting a shareholder rights plan to fend off the activist firm Elliott Investment Management, commonly known as a poison pill. Let's bring in now Abigail Doolittle, who's been looking into all of this. First of all, how big of a stake does Elliott have in Southwest?
It's pretty significant. We don't know exactly, but it's about 11%, or I should say that we don't know the exact position size. And if you go into the Bloomberg OWN own function, Elliott isn't actually there. But if we take the 11% that's expected to be or estimated stake size, that puts them as the second largest shareholder currently. But maybe when everything jiggles out, they could even be the first. But they're basically one of the top, which is kind of surprising. That's a big size. And of course, they're an activist investor, and they made a lot of noise when they revealed this stake, that they wanted new management, they wanted to make cost-cutting changes. This company has really never recovered, the stock, I should say, from that disaster a couple of Christmases ago when there was the booking problem, still down about 57%. But what they're trying to do here, Southwest Airlines, they are trying to protect their shareholders from Elliott doing whatever they want to do. So by offering these rights, they potentially dilute Elliott's position. Now, at the end of the day, you have to wonder, what does Elliott really want? The airline business, very, very difficult. This is a great brand. This is still still one of the few airlines where you can fly, buy a ticket, you don't have to buy your seat, you don't have to buy your bags, it all just comes in one. And they know that this is an airline brand that has survived recessions, it's survived all sorts of difficult situations. At the end of the day, there's a possibility that Elliott really doesn't want to make all of these changes, but they know that if they hang on, they're probably going to do well. Here's Southwest Airlines fighting back a little bit to make sure that they don't get in there and make changes, because some of the changes that they were talking about were around seats and were around bags. It could turn out to be to the detriment. Again, the airline business is very difficult. Years ago, Berkshire Hathaway, they would not invest in airlines for this very reason. There are a lot of famous investors who just stay away. So, the plan could actually be just to ride this stock higher and attract other people because they are rattling the cage.
What's so interesting is there was a piece out on Monday that talked about how activist investors, did you guys see this? Campaigns are at record highs right now.
Interesting.
So Lazard said that they reached record levels globally in the first 6 months of the year. New activist campaigns totaled 147. And a lot of it was driven by, right? It's a lot. And a lot of it was driven actually by Japan. And 62 in the US were launched, and a lot about tech. And a lot about real estate is where you've seen a lot of the activist action.
Well, you know what's so interesting, because what comes to mind to me for a lot of times with these activist campaigns, the share size, the stake size is not that large. But in this case, as you and Scarlett were mentioning, around 11%. So it's really pretty significant. That makes this, a little bit different. But that is kind of stunning. And the changes that are made, it's interesting because often I feel as though it really is rattling the cage more than actually redoing the company necessarily. And some of the analysts, at least one analyst that I talked to in particular, thought that was the case here on Southwest Airlines, trying to recover the stock again from that big dip, essentially.
But it's not just Elliott, because other investors, big investors in Southwest, have also called for changes. Artisan Partners, which is, I believe, the 9th biggest shareholder, is also pushing the management of Southwest to take a closer, harder look at its top executives.
Well, something that they can do, so I'm not an expert on this, but I'm going to do my best to explain it. So in terms of the right, for each share of common stock under the plan, it runs for a year. Once a shareholder, a group of investors, accumulates 12.5%, then those rights will be allowed to purchase additional shares at a 50% discount. Not only does that dilute Elliott, but I would imagine it would give them more sway with the company. So if they are serious about that, they could really exercise under this plan to have more influence. And at this point, you would think that the management of Southwest Airlines, because this has been pretty hostile from Elliott, I think that they said that they wanted to remove the CEO. They may be very amenable to working with other shareholders.
All right, Abigail, really appreciate it. Thank you so much. Bloomberg's Abigail Doolittle. And to that point, apparently Scarlett Elliott is one of the world's most active boardroom agitators right now. $100 billion so far combined in market value of companies this year, and pretty much also in Japan. They were activist investor trading campaign against the trading house Sumitomo.
Yeah, well, Paul Singer's not afraid of a lot of things, including rattling entire governments.
Lots of cases,
yes. I think for Southwest, he just sees a ripe target and is looking ahead. But I think Abigail brings up a great point, which is Southwest brand is something that's beloved by its customers. And to change that up and just turn it into another airline where you get nickel and dimed for your seat selection and for everything else is going to turn off a huge part of its fan base.
Especially when domestic short-haul flights are still very much struggling versus the international guys. All right, coming up, we are drum beating to the closing bell, which is at 1 o'clock. We're about 13 minutes away. James Aubin is Chief Investment Officer at Sierra Investment Management. We're also drum beating to the Fed minutes coming at 2 p.m., which is also when the bond market closes. So stick with us. This is The Close, an early edition of The Close on Bloomberg. Welcome back to the early edition of The Close. We are 10 minutes away from markets closing right here in the U.S. on this holiday shortened trading week, and we are record highs for the NASDAQ, record highs for the S&P as well. One of the best performing sectors within the S&P is materials, up by about 0.7%. You also have tech making a run for it as well as NVIDIA pops into positive territory. I just want to point out Paramount, sort of an idiosyncratic thing, but that stock's still up by 7%. Scarlett, it's so interesting, though, you look at the data. You know, the jobs numbers coming in a little, not even weaker, but just a little slower in terms of additions. You have ISM services not doing well, and yet you get that record high. It's like the bad news equals good news until when?
until we actually get to a point where maybe the Fed says something that it's going to move forward? I'm not sure. This is a really good question. And our earlier guest, Calvin C. of BNP, was saying that he sees the risks as asymmetric, that the bond market will move more if we get a weaker than expected jobs number on Friday than the equity market. Presumably, the equity market has a little bit of momentum from the earnings outlook, which for the most part, we're probably past the worst of the earnings cycle.
Yeah, exactly. But then I think the question becomes, is it just going to be big tech?
All right.
That's safe to trade.
Lots of questions here. Let's bring in our next guest, James Aubin. He is Chief Investment Officer at Sierra Investment Management, and he joins us now. James, it's really good to speak with you. Thank you so much. What did you see from today's data that gives you confidence that the Fed is in position to move towards cutting rates?
Yeah, I guess that ISM services number was really disappointing, and so it shows that there are some cracks in the economy. That was expected to stay in expansion mode, and that combined with some other data, obviously increases in continuing claims, is something to keep an eye on. And slowly but surely, we're seeing initial jobless claims tick up. But I think those things together are showing that the economy is headed, to a softening stance.
Yeah, towards a softening stance. So in that kind of context, you look at the record highs, not just in the S&P 500, but the NASDAQ 100. Does it make sense for big tech, and by big tech, we're talking about a handful of companies, really leading the way day after day?
Yeah, I mean, these companies obviously have exceptional businesses that have a blue sky growth outlook, right? So the Mag 7 or some of the more AI adjacent names are certainly poised for some huge growth, and those expectations continue to increase. And recently, the fundamentals have been sort of validating those expectations, and we'll see if that continues here in the second half. But I would say overall, those tech names are dominant in terms of their ability to generate cash flow and continue to show signs of strong growth, both top and bottom line.
When we take a look at the bad news, good news situation, when we get the slowing data, does that prevent a broadening out of the rally from tech into other areas like small caps and deeper cyclicals?
Maybe. I think that certainly makes as growth slows, investors look for growth, and these companies are the highest growing, fastest growing companies out there. So typically when you see growth slow, investors look to buy the secular growth names, and those names could continue to benefit at the expense of some of the smaller cap names.
At what point, though, does that, and I guess it's all tied together, but at what point does that inability to broaden out to small caps mean that it's a canary in the coal mine versus just we're not there yet?
Well, that's a tough question. I think it's, there's kind of a double-edged sword in some ways for small caps, because if there is softening in economic growth, we do expect the Fed to start cutting rates more aggressively, and that should benefit them on one level in the sense that their interest costs will go down and their earnings should benefit from something like that. But as far as there are generally more economically sensitive companies, though, so I think it's hard to say. I think company data itself is probably not the best indicator of the direction of the economy. Those are kind of two separate things. I'd look more at the economic data as that canary in the coal mine, and focusing really on the employment numbers and things like PMIs to give us a better forward-looking view on where the market might be headed.
James, how are you thinking about political uncertainty and political risks weighing on the market, given how stretched the S&P 500 is right now? We have elections in the UK, we have elections in France, we have the possibility of President Biden maybe changing his mind on running for re-election?
Right. Well, so far it doesn't seem to have much of an impact, but typically these concerns ratchet up as we get closer to November. So you're thinking August, September, when that particular issue becomes more in focus for investors. Obviously, we saw a little bit of reaction to the debate with bond yields increasing after that event. But I think as we hear more from the candidates over time and get a better sense of what the policies are likely to be, and the general uncertainty, though, factor about where things are going to land post-election is always a source of anxiety for investors, and I think that could definitely spur a little bit of pause when it comes to optimism.
All right, James, we really appreciate it. Thanks for joining us on this holiday. James St. Aubin, Chief Investment Officer at Sierra Investment Management. And funnily enough, Piper Sandler is dropping its S&P target forecast. Like, you know what, guys? It doesn't do anything for us to predict the future.
Who was the last one to do that?
Tony Dwyer, wasn't he?
Oh, interesting.
And when he was still at Canaccord.
Yeah.
It's like, guys, it's too hard to predict. And this is a great point as we head into the closing bells. Volume picking up a little bit. S&P, NASDAQ still at record highs. This is Bloomberg.
Welcome back to an early edition of The Close. I'm Scarlett Fu.
And I'm Alex Steele. Here we go. Closing on this trading day at 1 p.m. We are at a record close on the NASDAQ, record close on the S&P, record close in the NASDAQ 100. We also have a record on Microsoft and Apple. The S&P up 0.5%, 33 days that we have seen a record high this year for the S&P.
As for today's record high, you know what we can credit it to?
Tell me.
Bad economic news.
You like that, right? It's like bad news, good news, bad news, good news. How much do we hate that? But the funny thing is, I was wondering if the Russell would get dinged because of that weaker news. And the Russell is also up by about 0.1%.
Marginally.
Clearly off the highs,
Yeah.
but still, I think that tells us something about the rally, too. Volume is picking up a little, volume definitely picking up as we head into the close. It's just more like investors want to buy. Like, that's just the deal. Like, any dip, you're going to buy it. That's what the safety trade is. It's very strange.
I got to wonder what it's going to look like after we get through this weekend, the rest of this week and this weekend, after you have the UK elections, the French elections, the big jobs report, and maybe a little bit more clarity on what happens in Washington with all the reports that President Biden is considering dropping out of the race if he can't regain the American public's confidence.
And it's a great point on Friday, too, because like no one's going to be here and no one's going to be trading. So it's going to be very thin. So you could see some really violent moves, maybe in particularly in the bond market as well, which makes closing at the 33rd record high even more interesting. Apparently, we're looking at 248 advancers to 250 decliners. Pretty split on the day.
Absolutely. And if you look at the IMAP, which of course shows how the different sectors are performing on this day, definitely more gainers than decliners. And part of that is because the sectors that are in the red are fairly small in size and in weighting. Healthcare is the biggest laggard, off by 0.75%. Consumer staples and financials also marginally lower, declines of 0.1%. But you look at the advancers, Alex, the biggest sector, the most influential sector is technology, up 1.5%. Materials and utilities also gaining ground by 0.8% and 0.6%, respectively.
Yeah, you got copper was up. That was the material play, which there was no real true headline as to why. But Nvidia turned positive, up about 4%. Tesla at the highest since January. And like I mentioned earlier, Microsoft and Apple at record highs. All right, let's get to the bond market. That's where you saw the action when you got that weaker ISM services data that came out. You have buying all across the curve. Yield just dropping lower here, particularly in the back end. 10-year yield down 8 basis points. It should be pointed out that earlier this week and last week, we did see a sell-off in the bond market. So no surprise that we've seen buying today and yesterday as we kind of reverse that trend.
All right, let's bring in Bloomberg's Jess, Menton, and Norah Mulinda, because normally around this time of the day, we go through the best performers and the worst performers. I know you guys are looking at some individual names, and I don't know if Tesla's on your list, but it's up for a 7th straight day.
That's right. So if you do look at Tesla's stock right now, TSLA is the ticker symbol on this. It's actually up about 6.5%. Its best day since July 2nd of obviously looking at this. But that wasn't that long ago, earlier this week. But to your point, because Tesla just came off actually its worst performance relative to the S&P 500 in 4 of the past 5 quarters. So actually, now that we are in a new quarter, you've seen this stock, even over the last 2 weeks, it's actually been the week-to-date gains over 20%. So you're seeing a big bounce after obviously an underperformance there. And the first half of this year, that stock had been down about 20%. So you are seeing a bounce here. And of course, this does come on the back. It did post better than expected deliveries for the second quarter. So we all know Dan Ives over at Wedbush. He's a well-known perma bull. But this was a stock that they did take off of the firm's conviction list earlier this year as far as the best ideas. But he did hike his 12-month target on this. So right now he sees the company, actually it was previously the target was around 275. Now it's around 300. So you do have that forecast being basically an implied move of a 30% gain from actually Tuesday's close there.
To your point, if you look at the best performers in the S&P 500 so far this half, which really is so far this week, Tesla up by 25%.
Yes.
And the next best performer is Paramount Paramount, up by 10%.
Right, exactly, which was another gainer that I was going to bring up.
Headline,
right? Well, if you look at Class B shares of Paramount, so PARA is the ticker symbol on this. If you look over at its stock today, so obviously it's getting a big bounce because Bloomberg News actually did report this story that Skydance Media has reached a preliminary agreement to buy National Amusements and merge with Paramount. So we've had so much different news coming out of this, but if you look at its stock right now, up about close to 7%, so its best day since actually Monday, so not that long ago. But when you are looking at this, actually the Wall Street Journal reported earlier this week that the agreement, but potentially if you're looking at the terms of the deal, still weren't known. But because of this kind of rejuvenation of what could potentially happen with this stock, we're seeing a big pop with that today.
Living on a merger prayer. All right, you got MGM also. What's going on here?
Right, so let's take a look at MGM stock. So MGM's the ticker symbol, up about 2.2%. Its best day since June 28th. So when you're looking at this, obviously, you're seeing a big bounce here, and especially because what's been happening on the back of that, and especially when you're looking at some of the industry moves here as well. So that's something that in that particular sub-industry group in the S&P 500 that had been underperforming for a while, but in particular, BTIG actually ended up rating it as a buy, basically because of what the trends you're seeing when it comes to Vegas as well as China. And of course, when you think about MGM and some of its competitors during the depths of the pandemic, but then coming out of that, you are starting to see some of those travel-related stocks, even though they had a surge at a particular point in late 2022 and in early 2023, you're starting to see that too. So really being driven by that BTIG rates as far as a buy right now.
All right, so those are the advancers. Norah, I was looking for some decliners. What did you come up with? Because it was kind of hard to find some notable ones, some big ones.
Right, exactly. I mean, I've been watching Constellation Brands all day. I know Alex knows this. Of course, as we're heading into the holiday, tomorrow being July 4th, this is actually a beverage maker. And so I'm watching this. It's got some mixed first quarter results that came through. They were seeing strength, particularly in the beer segment, a bit of a pullback there in the wine segment. So it's really interesting as we're noting this. Barclays actually called out that it has, quote, a steep hill to climb still coming off of this earnings report. But one thing that Truist called out that I found rather interesting was the fact that the company has had a long history of raising its EPS guidance coming out of each of its quarterly reports. And this is one of the times that we're actually watching it come out, and it maintained it. So there is a bit of apprehensiveness as we're looking at the stock, and you are seeing shares, of course, closing lower today.
Norah came on radio, and she was like, yeah, Modelo and Corona. I'm like, nothing. I like the crafty, cool beer.
That was the imported beers. A lot of the younger ones are buying.
Oh, you young kids. Okay, fine. What else are you looking at?
Well, I'm watching Novo Nordisk, and of course we know that this is really known for being one of the having the best-selling diabetes and weight loss drugs, especially as we think about Ozempic as well as Wegovy. And what's really stark here is the fact that these drugs are apparently linked with rare cases of vision loss. That's according to a Harvard study there. And it says that people who are taking these weight loss drugs are 7 times more likely to be diagnosed with a stroke-like eye condition. But in looking at analysts and seeing what they have to say, people do not think that this will actually alarm those who are taking the drug too much. So I think we're just going to have to watch and see how the stock reacts to this. But we are seeing shares of Novo Nordisk down here in trading.
Yeah, I believe this is a second day of declines too as well.
So exactly how much people want to lose weight, and like, because then you get the butt lift, the arm lift, and the face lift, and the boob lift, and you get all the lifts and stuff. Like blindness, it's like whatevs. It's secondary.
Not a big deal. We'll figure that part out later.
Yeah.
There's a stock that is on your watch list that was at a record high just yesterday, but has just come off. And there's actually news tied to the founder and the CEO.
Exactly.
Or former CEO, I should say.
A big one, of course. We're looking at Amazon here, and this is after Jeff Bezos said that he would sell $5 billion of the stock. And we are seeing a bit of a pullback here when we look at the company as after the close today. But this is after a filing following yesterday's market close. And as you mentioned, this has been after the stock actually hit a record high. And this has really been a stock that has been in focus, especially as we think about these tech names. And we do know that dating back to February that Bezos has been selling off large sums of his stock, especially as he's planning to make that move, if I'm not mistaken, to Miami. And so this has really been something that investors have been watching here as we think about this big mega cap name.
All right, you guys, thanks so much. We really appreciate you spending time with us today. We know it's a slog on a short and holiday trading week, but we are closed. The market is officially closed. Jess, Menton, and Norah Mulinda, thank you both very much. We're still settling out here, but you're looking at an S&P that closed up about 0.5%. Volume really picked up, though, into the close. The NASDAQ closed up about 0.9%. All right, coming up, with the film Inside Out 2 leading the charge. Wait, Scarlett, have you seen this?
I have not, but I heard good things about it.
Well, it's because you don't have a 10-year-old anymore, so that's probably the case.
But this is also just as much for adults, right?
Oh, my gosh. Totally. It's just so good, and you cry, and it's a lot.
And it's got hockey, so I have to watch it now.
Oh, there is a lot of hockey. There's anxiety. There's ennui. It's amazing. We're going to get the latest on the state of the summer box office. Please, Deadpool, let's go. Our guest is Ray Nutt, Chief Executive Officer at Fathom Events. This is the early edition of The Close on Bloomberg.
I think the worst of Hollywood's impact from last year's strike is over. We're going to start seeing a bigger slate of films starting in the second half of the year. We're getting a really good start right now with Inside Out 2, but we'll start next third quarter with Despicable Me 4, then go to Twisters, then go to Deadpool and Wolverine, and then we look into the fourth quarter, and fourth quarter is loaded.
That was Roth MKM analyst Eric Candler speaking with us about the recovery of the Hollywood box office after last year's summer of strikes. For more on the summer box office this holiday weekend, let's bring in Ray Nutt. He is CEO of Fathom Events, which is among the top distributors of content to movie theaters across the country. Ray, you and I were just talking, and you said that you're going to be watching Inside Out 2 this weekend, and you're looking at some early numbers, and Despicable Me 4 is tracking pretty well, which is kind of surprising given that both these movie titles have numbers after them.
It just goes to show you that if you have good content and family-oriented content on top of that in movie theaters, that moviegoers are hungry coming out of the pandemic, they're hungry coming out of the strike, and there is some sense of normalcy starting to happen in the movie business at this point. So. Yeah, I probably am the only person in the world who hasn't seen Inside Out at this point, since it passed $1 billion globally at the box office just recently. But I was just looking at hourlies for Despicable Me, and it's tracking very, very well. So I'm looking for a great weekend here.
Okay, we also have Twisters, I should say, which is a sequel, obviously, to the original in the 90s, Deadpool, Wolverine, later this month, which Alex is very excited about, and Alien, Romulus, which is coming out on August 16th. All of these are part of these franchise titles. Talk a little bit about the comparison to last year, though, because last year was kind of an anomaly. You talk about how things are normalizing. Last year was not normal, right?
And some interesting statistics that we're actually seeing. 2 weeks ago, going into the box office, it was trailing 26%, I believe, behind 2023. And just with the opening of Inside Out, it gained 6 points, and the industry right now is only 20% behind 2023. So it's trending in the right direction, and we think with some of the films that you just highlighted there and are highlighting, I think they're going to do very, very well, and you're going to see a great recovery in our industry.
Last summer, it was Barbie Oppenheimer, and that was just the thing. It just blew away the box office. Are we going to have that experience again?
I think with some of the films that you just highlighted, especially Deadpool, and another film that probably should be highlighted in September, that's way out there, but Beetlejuice is coming out with, through Warner Brothers, and I think that's going to be a huge film as well. So holidays are coming too, and you got Wicked coming. So there's some great film, and you're going to see like I said, a nice recovery at the box office.
How long until a film hits theaters versus when it goes on streaming? I feel like it's a hit or miss depending on what title you're looking at, and I'm just wondering how that affects the consistency of the box office.
You're typically, that I spent the better part of my career on the exhibition side of the business, and It's very sensitive, obviously, to the exhibitors. So they have been working closely, as we have, as the 8th largest distributor of content in North America, to movie theaters. So, you look at anywhere, 45 days, I think, is something that's probably on average before it hits some kind of downstream once it, first hits the theaters.
Okay, so you have the big releases like Inside Out 2 or Kung Fu Panda 4, which obviously hits all the different big screens, but you also distribute things like the Studio Ghibli Fest, which caters to a more specialized audience, but a very devoted fan base as well. Can you talk a little bit about the thinking behind how you roll out something like those kinds of events?
Yeah, Fathom is about 20 years old right now, and about 2 years, we used to do just single night events, 1 and 2 night events. And about 2 years ago, we pivoted as a company, and that's how we've become the 8th largest distributor. And what we did, we became a specialty distributor. One of the first films that we rolled out was last year was a film called The Blind. It was a biopic on Phil Robertson, if you're familiar with him, from Duck Dynasty. And so we are transitioning into that area. It's a very huge growth area at this point in theaters. 2023 versus 2024, we were up 45%. We just came off the best first quarter in the history of the company with The Chosen, if you're familiar with that series, faith-based series. And we have the highest documentary right now on the market, Jesus Thirst, The Miracle of the Eucharist. And you can even bring back some old films, which is great. We brought back, in conjunction with Warner Brothers, Lord of the Rings trilogy. We did that over 3 weekends, including 4DX format, which is very important to our exhibitor partners, and did $8.3 million over just 3 weekends with that picture. So this particular sector of the industry is a high growth sector, and we've got some great films coming out later this year as well.
Love to see Lord of the Rings in the theater again. I saw the second one 9 times. Anyway, Ray, before I know.
That was pre-children?
Yeah, of course. Yeah. You don't spend that much time in the movie theater when you have kids. Hey, Ray, last question for you. This might be out there, but, AI and making these kind of movies, like, come on, Twisters, like, it's the same movie as Twister, just with different people. Like, why can't AI just write that script?
Yeah, well, we just came out of a writer's strike, and I think that was settled that way. But that being said, people still like creative writing. People still like to, there's a number of people in this industry that work in Hollywood and work on movies, and AI is not gonna replace that. There's a ton of people out there with a high degree of talent, and we run into filmmakers. We look at about 3,000 films a year here, and only about 90 of them actually make the screen through Fathom. So there's a lot of talented people that I run into personally, and those folks are here to stay.
It's a fair point. Just for disclosure, my husband's a playwright, so I want those playwrights and those writers to stay. Okay, Ray, thanks a lot, Ray Nutt, Chief Executive Officer of Fathom Events. All right, still ahead, red, white, and rosé. We're going to speak with the CEO of Fete Wine Company about what consumers will be drinking this July 4th weekend and all summer long. This is an early edition of The Close on Bloomberg.
I just wanted to learn about the industry. I wanted to learn about what it takes to actually grow wine and what happens in the process. So I just started drinking the wine, and then I realized, look, I need to stop spending so much money on consuming this wine and figure out what is the right business model in this industry.
Instead of spending your money on wine, investing your money into wine and making it on your own. That was a bit of my conversation with former NBA All-Star turned sommelier Carmelo Anthony. He and his business partner spoke to us about the launch of their premium wine and the high-quality ingredients that justifies its $270 price point. Our next guest also knows a thing or two about how to navigate the luxury wine industry as a Black entrepreneur. Joining us now from Atlanta is Donae Burston. He is founder and CEO of Fete Wine Company. So good to speak with you, Donae. How are you?
Good yourself. Thank you for having me.
Great. I want to get started with, of course, this being the 4th of July weekend. How big of a deal is this when it comes to the wine industry? I think about how the start of summer always has people saying rosé all day. Does that apply for things like holiday weekends, like the 4th of July?
Well, absolutely, and especially for us. Our name is Fete, which means the party in French. So for us, this is a huge weekend to party and to consume rosé. I think overall, rosé is very much seen as a seasonal drink and a seasonal beverage. So it's ripe for consuming during the 4th of July holiday weekend. But for us, it's rosé all year.
Yes, and is the demand there? You might be making it, but is the demand part of it?
Absolutely. And we're seeing that trend is changing. I think a lot of it has to do with the fact that all the brands are pushing for this idea of no seasonality, as well as wine cocktails are really appealing to the young consumer, which is making them seek out rosé brands and seek out Fete all year round.
Okay, rosé, I'm definitely partial to. It speaks of hot weather or warm weather, and it speaks of, just getting to spend time outside, languid afternoons. When it comes to other kinds of wine, Alex and I were talking about how we feel like Lambruscos are not getting their due, the sparkling red wines. What is it about Lambruscos that don't get the attention that other sparkling white wines or rosé get?
Yeah, I think it has to do with the fact that when Lambrusco was at its popularity, it was at the big boxes or the big jugs, which our parents and grandparents do. So there's a connotation with that. But there are some great makers out here putting out some really good products. But also for us, we're seeing chillable reds really take off, which is why we put out Lafite Rouge, which is our red blend from Provence. And that's a huge hit in markets like Texas and Illinois that really love their big red wines.
Oh, that's interesting. What about this non-alcoholic trend, which really picked up during COVID, along with alcohol sales, but also the non-alcoholic industry really picked up? How do you, Donae, think that that's going to evolve, and how do you manage that?
Yeah, I have no time for it. Listen, it took off. Certainly, there was this need for moderation coming out of the pandemic, and we're seeing a lot of success with brands that are breaking through. I talk to a lot of buyers and gatekeepers and decision makers, and they're not so much on board with the trend as they may have been in previous years. So we'll see. Time will tell.
Okay, you mentioned Lambrusco and how it was often distributed in jugs and how there might be people are holding that against it a little bit. What about the trend now? I increasingly see wine sold in a box or in a can. Does that broaden the appeal of wine, or does that kind of, add a layer to it in terms of bringing in different connotations of other drinks, juice boxes, for instance?
Overall, the wine industry has had a problem of being too stuck in their ways and traditions. So I think the entry of box wine and canned wines and people putting quality wines in those boxes and cans are the key, right? Because there's a lot of bad stuff on the market. But certainly we're seeing producers now making great wines that are coming in cans and boxes. And as we push more for sustainability in the industry, it's important that we do look at alternative packaging as well.
Donae, before we let you go, it's always good to talk to a business owner about what your biggest issue is right now, either costs or labor or whatever it is. What is it right now for you?
I think the biggest issue for us is that the misconception that the wine industry is really struggling. I think that's false. For us, we look at our on-premise business. We're up triple digits versus last year. We look at our retail business. We're up 100% versus last year. So it's just this constant berating of the messaging of the wine industry is in a slump is false. I think the brands that are connecting with consumers in a meaningful way are the ones that are making its way through. So I think if we can all just stop the doomsday, gloomsday scenarios and messaging around the wine industry, we'll see things certainly pick up across the board.
The numbers tell the story, as they say. Donae, thank you so much. Donae Burston is founder and CEO of Lafite Wine Company. Any plans to drink some wine this holiday?
I don't really drink that much anymore. After I had long COVID, my wooden leg disappeared, and I drank maybe one or two bubbly things, maybe.
But Lambrusco when you do.
But I like the bubbly stuff.
Yeah.
It can be bubbly pink, bubbly red, bubbly white.
And also, you were telling me it has fewer calories than regular wine, which I didn't realize.
Has under 100 calories for a flute.
Bonus. All right, coming up, we've got the top three, where we focus in on the top three movers and shakers at the center of the day's big stories. That's next. This is The Close, the early edition of The Close on Bloomberg.
All right, it's a critical next few days for President Biden. He meets with Democratic governors, campaigns in swing states, and sits down for a major media one-on-one interview. This is the White House denies a report he is considering whether he should keep running for re-election. Joining us now is Wall Street Week host David Westin, who probably had to rejigger his whole show to accompany all the news that we're seeing. What do you think the most important thing is going to be over the next 72 hours?
I think definitely the interview with George Stephanopoulos. Now, I'm biased. I came from ABC News. I hired George. He's a friend of mine. But I think that they are trying to decide what can they do to turn this around. They understand. They're not stupid. They understand they have to turn this around somehow in the eyes of the American people. What can he do? And appearing at a rally with a script and a teleprompter is not going to get that job done. And I think that they're thinking we need to sit down with somebody who's really going to push us, and we're going to be able to show that that was actually just one bad night. That's not actually who President Biden is today.
Okay, he also is meeting with Democratic governors this evening, and I'm curious to get your take on what you think is going to happen, whether he's reassuring them or they're pressuring him to make a decision to step down.
You know, I think that a lot of those governors have to be careful because their names are coming up as possible successors, right? So they have to be a little careful about that. He definitely has to reassure them. I don't know how hard they'll be pressing. They certainly will be pressing the way a lot of other Democrats were and saying, look, at least take this seriously. Don't just say, oh, it's no problem, it's one bad night. That was part of their problem, is they just said, oh, no big deal. Nobody thinks it was no big deal. You got to take it seriously. I think the bigger issue is what's happening in the House of Representatives, because most people thought it was quite possible that the Republicans would take the Senate, but the Democrats would take the House. After that debate performance, there was a lot of talk about maybe the Republicans running the table. And boy, people are really concerned, particularly in the House of Representatives, if that's true.
So going to that interview, though, with George Stephanopoulos, I'm wondering then what would be looked at as a win, because those interviews are hard enough as they are, right? I get tired. I say the wrong thing all the time, as both of you are well aware. Like, you know, so it's like, what would be a win? He's not going to be perfect. He's not going to say every word correctly. So what's that narrow line?
Well, perfect. I mean, we shouldn't expect perfect of anybody except you, Alex. We shouldn't expect.
No, we know that is definitely not true.
But I mean, it's not perfect. It's can he do the job? I mean, after that debate performance the other night, I think a lot of people came away. I'm not sure he can do the job. That he really is on it enough to do that. You also have to think about it, if I can, from George's point of view. He's got to be tough. It cannot look like he's giving him a pass. Yeah. I mean, George, of course, served under President Clinton. He was a Democrat in a prior life. And he cannot come across as softballing with President Biden. So if you're preparing, if you're President Biden and his people, you got to be saying, George is really going to come after us. We got to be ready for that.
Has the Biden White House or the Biden campaign, more accurately, been able to push this narrative that they've been able to still raise money even after the fairly disastrous debate performance?
Well, they certainly raised money, without a doubt, a fair amount of money. But I think their issue right now is, I think many people think they underreacted at the beginning, which got more and more Democrats upset. And also, at least the way I've been consuming the news, it's like they've had 2 or 3 different narratives. He had a cold, you know, he just had a bad night. Oh, but he was traveling a lot. I mean, we knew he was traveling for quite some time. And he did have, I think it was 6 days, before this that they set aside. But they keep changing the narrative. By the way, when you're on the defense, one of the things you have to do is figure out the narrative you've got, get to it as fast as you can, and stick with it. As soon as you start changing your narrative, the press just kills you. It's like sharks with blood in the water.
And don't call them bedwetters.
That is probably not.
At the end of the day. To go to the Democratic point that you were making in the House, is there anything that's going to relieve the pressure for House Democrats to call on President Biden to do something different if the House polling numbers are changing?
Well, I think it goes back to the same thing. The House has to start seeing that, in fact, he's performing better, and perhaps even that there's some polling that's coming up. I mean, their main problem is they don't want him to drag them down. They want to hurt down the ticket. They don't want to get taken down with him. Whether he wins or loses, I'm sure they want him to win. But most of those representatives tend to be focused on their own job. And are they going to get reelected? And so they need to see, A, yes, he is performing a lot better. We think this might turn around. And B, we're starting to see it in some numbers, I would expect.
All right, David Westin, thank you as always. Bloomberg's David Westin, host of Wall Street Week, which airs every Friday. And Alex, you think about what the Democrats have already done to get themselves in a better position for November. That includes, of course, Kathy Hochul, the governor of New York, turning tail on the congestion pricing plan because it was seen as being bad for the suburbs and the Democratic seats that the suburbs do hold in the House of Representatives.
Yeah, but apparently we all paid more in taxes, so it's fine. So, I mean, there's a budget surplus now, so go figure. On that front. And remember that all of this, by the way, is happening before NATO, before you have 32 NATO members descending on Washington for an annual summit. And talk about, your appearance being that important as well, considering all the rhetoric that happened during the G7.
Absolutely. All good things to keep in mind here. All right, let's move on now to the top 3, where we name drop the people driving some of the day's most talked about stories. We've convinced Matt Miller to join us today. He is, of course, part of his own top 3 when he kicks off his new show with Chonali Basak.
I thought I was one of the names. I thought I was one of the top three.
You belong in your own category.
Sure.
You belong in your own category.
You're the top four. You're like the fourth and the top one.
But we're going to each introduce the top person that we're watching today and why we are. My top person is Elizabeth Warren, the Massachusetts senator, accusing Jay Powell of giving bank CEOs too much sway over policy. She wrote a letter to Jay Powell criticizing him for having multiple private meetings and talks with top executives. She counted 19 alone with Jamie Dimon since February of 2018. And she's convinced, or I should say she's concerned, not convinced. She's concerned that these executives now have too much opportunity to influence policies like executive compensation or more recently bank capital proposals, which by all accounts regulators
She's always concerned about that.
Yeah,
it's not just now. She's concerned that bank CEOs have too much sway over policy since she began her career, right?
But she sent a letter now.
Isn't this called lobbying? Like, isn't this always what happens? Like, the industry groups go and they lobby for things that try and
They
make
don't
their lives
lobby
better.
the Fed chief, though, I think might be what her answer would be.
It's interesting that she is taking it out on Powell, right? Because the devil you know is better than the devil you don't. So if Trump wins the White House and then decides to kick him out and replace him with somebody else, she's probably going to like the new guy a lot less. Or gal.
But the idea is that then that Fed chair could be much more dovish, in which case she would, in theory, like
then
more
she.
dovish
That's a very
Fed
good point,
chair,
Alex. So then she and Trump could be on the same page in that case.
which would be odd and
That
then
would be
confusing and
bizarre
that would-
world.
and then
And wonderful.
and then things would all be weird. Okay, let's go to the second one. I'm watching Panera founder Ron Shaich. So he is now a billionaire. And this is after his stake in Cava skyrocketed. So I've never eaten it at the Mediterranean fast food casual chain. Have you guys, the Cava group?
No.
No, I haven't either.
Well, this is great. Okay. Well, their shares have skyrocketed 330% since its IPO in June of 2023. It's now worth about $970 million, and that gives Ron Shaich a total fortune of about $1.6 billion. That's according to the Bloomberg Billionaires Index.
Yeah, it's pretty remarkable. He's the biggest non-institutional shareholder of Cava. He created Panera in the 90s, so clearly he knows a thing or two about fast casual restaurants. He sold that company to PE in 2017, and he used the proceeds from that to form this investment firm in which he invested in hospitality and entertainment companies, including Cava.
I would like to eat at Cava. I just want to point out the only reason that I haven't eaten there is that I haven't really seen one around. So if they put one here in, what is
Midtown
now kind
Manhattan?
of the dead area of Midtown East, I would definitely go there because otherwise my only choices are like Chipotle, Chick-fil-A, and Sweetgreens. There's nothing else around here, right?
Well,
There's a McDonald's.
But the rent is just so expensive.
Exactly.
there. I go to
I
the
don't think I
Gourmet
would go
Deli
there.
on 3rd Avenue. They have the best salads. But what was I going to say? Oh, Panera, though. Oh, Panera, the bread bowl with the broccoli cheddar soup. You
like
guys
that?
into it?
I don't
did
know
in
that
college.
there's not a Panera near us.
No, I
in
can't
Midtown
eat it
East.
anymore. It's too many calories. But man,
That's like
that
a
was
strip
my
mall
go-to.
place. I don't think you're going to see one around here. I'm not down.
Maybe that's true. All right, you have the third one.
Yes, third on the docket is Pierre Gasly. He has locked up his spot at Alpine F1, the team owned by Renault. It's a multi-year deal, he says, although last year he also signed a multi-year deal, so I have a feeling it's more like a year plus. I spoke to him earlier today about his potential new teammate, Carlos Sainz. Listen to what he had to say.
I want the fastest guy available on the market, and it's no surprise that Carlos Sainz is the most competitive guy available out there. I think we got a strong team, a strong package. We've seen that we're able to develop. There's obviously still a long way to go.
So this is the F1 driver. He wears a helmet all the time, yeah?
Yes.
So like it's rare that we see him. There you go. See?
Yeah, look at those piercing blue eyes. You know what? He is
so much better to have seen him in his full splendor.
He's incredibly impressive, I think. And this team, which had a horrendous start to the season, has really started to add to the points in the last 4 races. They've got an interesting investor. Ryan Reynolds owns 24% of the team. And it seems like they're on the way to becoming like the top of the midfield because Flavio Briatore, who is himself a champion, has come back to try and give them a little bit of advice. So with the leadership of Gasly, who is now kind of like a senior statesman in F1, I think they have a real chance at doing better.
He looks like Benedict Cumberbatch.
That's awesome. I got interested with Ryan Reynolds there. Now you have me. Now I'm with you. But the reason why Matt's actually here is not us to help us get us through top 3, but it's also to talk about your new show. It's called Bloomberg Open Interest. It premieres Monday at 9 a.m. Eastern. We haven't shaken up the 9 a.m. in a very long time. What's the show about?
Well, that's because the show at 9 a.m. is already a fantastic program. Jamie Berlin, the creative director of that show, is helping us out with this one as well. But our idea initially was to focus more on single stock stories, to look at the macro economy through the lens of real companies that make stuff that we all touch and buy and eat, for example. And so we're aiming to have CEOs on, but also sell-side analysts, also, fund managers who are putting their money where their mouth is. So we really want to look at companies and how we can tell the story of the American economy and the global economy through these companies. As an example, on Monday, we have the CEO of Lamborghini. So, we're talking so much about the consumer and reports that, higher end consumers are starting to step down. That was in Walmart's earnings report, or they're not buying pools or Winnebagos anymore. We're going to find out if they're still buying Lamborghinis. Of course, we're still going to talk to top strategists. We have Mike Wilson on to kick off the show.
Great voice.
A great voice. At 9 a.m. on Monday. We have John Micklethwaite, because we're going to have had elections in the UK and in France by that point. And we have Howard Marks as well of Oak Tree. So I'm really excited for the program.
All right, looking forward to that. Matt, thank you so much for stopping by. From here on out, Matt is going to be on the morning shift, so it might be harder to convince him. But make sure to jumpstart your trading day with Matt, with Katie, and with Shanali as they bring you 2 hours of single stock stories driving the opening bell action. Bloomberg Open Interest premieres Monday at 9 a.m. New York time on Bloomberg Television.
All right, let's get to breaking news for you. This comes from the AP. President Joe Biden and Vice President Kamala Harris made a surprise appearance Wednesday, apparently, on a Democratic National Committee call, reiterating to staffers that they are in this fight for re-election together. That is the latest there from the Democrats, from the AP. Scarlett?
Having said that, Trump leads Biden 49 to 43% in a national New York Times and CNN poll. Remember, they're waiting to get some of those poll results, polling to see what they should do next. Right now, it looks like, again, Trump leading Biden in this national poll. All right, let's take a look at how markets closed on the day. We had an early day for the equity market. It closed at 1 p.m. and record high. I sound like a broken record.
So it goes. 33.
Yields go down on the 10-year. Bad economic news, encouraging people betting that the Fed will cut earlier. And, of course, the ETFs tracking the UK and France higher before elections. This is the close on Bloomberg. Move over Black Friday. Christmas is coming early this July as more retailers try to entice cash-strapped consumers with the biggest and best deals of the summer. Joining us now for more on this is Katie Thomas, who leads the Kearney Consumer Institute. Katie, Alex Steele, my co-anchor, is convinced that this is a real thing and she does this. But is this really about people using the deals offered up in the summer to get a head start on holiday shopping? Because as far as I can tell, every December there's a lot of people buying gifts for the Christmas and Hanukkah holidays.
Yeah, Scarlett, so I'd say you're both right. So some people do start shopping early if they're highly organized. So it is a great time to, take advantage of deals, but also to get ahead of things. So you're not actually doing that major cash outlay all at once in the months of November and December. But for the most part, what we hear from consumers is the part of the reason they like the summer sales is they feel like they can shop for themselves and they don't have to be buying gifts. So a lot of it, what you see people do is stock up for back to school. So a lot of great deals on everyday office supplies, technology, or maybe even appliances, things people have been holding out on, waiting for the 4th of July sales and the summer deals. But typically it's really kind of a self-focused event, a little bit of a midsummer opportunity to treat yourself.
So this is my thing. It doesn't have to be mutually exclusive. You can do both of these things. So my whole thing is I only shop on sale. It's my thing. I only pay full price for skincare and Birkenstocks. Katie, where do I go? Scarlett is cracking up at me. Where am I going this holiday weekend?
Yeah, so this weekend you have a lot of places that are having sales. So everywhere from Best Buy, Target, Walmart, some of those traditional players, and the lead into Amazon Prime Day, which doesn't technically kick off until middle of the month, but you're already starting to see some of the deals pop up now. And then across the board, most retailers are doing that typical 25% off the whole store, buy more, save more type deal. So you can really pick your own adventure in terms of where you want to shop. For me personally, I know my Nordstrom wish list is full because they have all those exclusive deals that are specific only to them. And so that their anniversary sale kicks off in a couple days. And so I have a bunch of things that I'm waiting to purchase once that goes into effect. So that's one of the things we're watching too, is where you get those exclusive deals, special items, things like that.
So buying gifts 5 months in advance of the actual holiday works if you're talking about products, but not so much for electronics because you want the latest edition of something. So you're not going to get the latest, iPhone, which isn't even out yet. Right now in July. And it doesn't work for services either in case you want to give someone an experience. So it really limits you to things as opposed to the bigger world of gifts, doesn't it?
It does. And typically what we see is, these summer sales aren't again, the big cash outlay. So a lot of times consumers are spending maybe around $100 per retail or something like that compared to the holidays where those numbers are $500, $600, $700 in total. So it's really cherry picking those specific items that feel like, to your point, Scholar, that, they're kind of hitting the right moment at the right time. It doesn't feel like it will, go any deeper. The other thing too to keep an eye out for is just some of these deals are due to excess inventory. So we saw that a lot during the pandemic where items like air fryers or, any even Pelotons, things like that, where they all of a sudden had this excess inventory. And so that's why you're seeing the discounting as well. So that could be a great opportunity to buy now because that inventory may not exist in a couple months either.
So is the consumer strapped? I mean, we get the ISM services. It came in really weak. The read-through is that the consumer is struggling. But then you get Carnival earnings, and they continue to deliver, and Norwegian. And then you get McCormick still doing well, but then you get Walmart struggling. I don't know what my macro read is there. So, Katie, how is the consumer?
Yeah, so Alex, what we're seeing really is what I'm calling a resigned and a weary consumer. So our read on consumer sentiment, we call it the Consumer Stress Index, and we just got our latest read in. And consumer stress in the U.S. has ticked up a little bit, and it's because people are just fatigued by political news, by the financials that are getting better, but also still persisting. I mean, inflation is still there, rates are still high. Home buying is tricky. So you're really seeing people be incredibly thoughtful in how they spend. It's exactly what you described. I'm choosing where to spend and where to save. And a lot of times you're saving on the everyday basics. That's where you're cutting back to enable spend on something like Carnival or a cruise. But I mean, even those experiences are not, foolproof. We're seeing it with concerts this summer. So while Taylor Swift and Beyonce have had incredible success, we're seeing other artists cancel concerts because they didn't sell out the venue, things like, so it's really, people are making really thoughtful choices. Where is it worth it to spend? Yeah. Where am I holding back?
Or, you're working on your personal life, like J-Lo, for example. All right, Katie, we really appreciate it. Katie Thomas leads the Kearney Consumer Institute. Really great stuff. Also this weekend, be sure to watch the Boston Pops Fireworks Spectacular, hosted by Bloomberg's Romaine Bostick and Carol Masser. This year's lineup includes Tony Award winner Kelly O'Hara. I'm so bummed I'm not going to be there for that. Country band The Mavericks and Motown superstar Darlene Love. That is tomorrow at 8 p.m. Eastern Time. Coming up right now, Kathy Bostjancic is chief economist over at Nationwide. We're counting you down to the Fed minutes and the bond market reaction. This is Bloomberg. All right, we are looking at the White House press secretary right now speaking with reporters for her daily briefing. I also want to point out that the AP recently is running some headlines that in a staffing call, President Biden has said that no one is pushing me out. There have also been headlines that Vice President Kamala Harris and President Biden have joined that call saying that we are staying in this. We're going to listen into this press conference now and see some of the questions that we're looking at.
looking at?
Debate was not his best night, and he said himself, it's not an excuse, but it's an explanation. I was standing here yesterday, and many people were asking why and what's the explanation, and that's what you heard from him. Look. The two, I think, in addition to the two major trips, he was also continued to do his presidential duties. He worked late in doing that, and he also prepared for the debate. And on top of that, there was obviously the jet lag, as you just asked about, and also he had a cold. And you all heard directly, you heard from him during the debate. He had a hoarse voice. Many of you reached out to me and my team and some other members of the White House asking what was going on. We confirmed that he had a cold. And so I think those two things, continuing obviously to do his duties as commander-in-chief, as the president. And so I think some of you here in this room can certainly relate to, what could happen when you're having an important moment and you're not feeling well, and also you wish you could have done better. And so he took ownership. I think that's important, and he's going to continue to make a strong case for his agenda, and that's what you're going to see. And he was given an explanation, and that's what he wanted to do. He wanted to get that out there and for people to hear directly from him, as he has been doing since Friday of last week.
It just seems like you're calling it an explanation, not an excuse, but it does seem like there are new excuses since the debate of what went wrong there.
I would say I don't think it's a new excuse. I think some of your colleagues reached out to us about the schedule. Some of your colleagues asked if the schedule was too strenuous or was it because of the jet lag, and so we are laying out and explaining exactly what happened. You heard from the president, you've heard from me, and it was indeed a schedule where the president traveled 6 time zones forward to G7 in Italy, 9 time zones back to LA, and 3 time zones forward again to DC. That's something that one of the print pooler on that day laid out for all of you and those who read the pool notes, and on top of that, he did have a cold. So it is an explanation. I don't think it is an addition. I don't think it's. We certainly don't want to explain this away. But you all asked me for an explanation yesterday. The president gave that directly yesterday to his supporters. He wanted to make sure, knowing that all of you would get that information as he's speaking to his supporters last night. Sure.
You mentioned all the calls that he has made in your topper. Why wasn't he doing that on Friday? And why wasn't he doing this sort of damage control? Why was he waiting to do that until middle of this week?
I mean, look, I was asked a similar question by one of your colleagues yesterday. And look, the president obviously right after the debate, he visited 4 states in 2.5 days, gave a couple of remarks. He met with supporters, whether at the Waffle House or in Atlanta at a watch party, or in North Carolina where there were hundreds of supporters there in Raleigh. And so he was busy dealing with his schedule, and also speaking directly and engaging with his supporters, and then spend time with his family. I think what's important is that he has done this outreach. He's having these conversations. It is important to him to do so. And the folks that I laid out that he spoke to or some of them have been his colleagues. Some of them have been elected officials that he's known for some time. Obviously, Leader Jeffries is a new relationship that he has, someone that he obviously respects, and so it is. I think it's important to note that they were strong conversations. That's something that the president told me and my team directly moments ago. He was walking around, and we happened to see the president, and he said they were strong conversation. And by the way, he looks great. The vice president's great, and they are ready to continue working on behalf of the American people. Okay, so.
Thank you, Corinne.
Alicia.
Hi. Is President Biden considering stepping down?
Absolutely not. And you heard, I believe, directly from the campaign as well.
Given the groundswell of concern from fellow Democrats, from donors, from supporters, doesn't he owe it to the American public to reflect on whether he should step down?
I mean, look, it very much into Sungmin's question and my answer to her question, where he had an opportunity to talk to supporters. He's done it a couple times at this point and laid out what happened on that night. Talked about how he understands, and it was not his best night. He understands that it is fair for people to ask that question. But we cannot forget his record and what he's been able to do. We cannot forget how he has been able to deliver for the American people for almost 4 years. That matters too. And he has the most historic record administration, the most in modern politics. And that should matter. And he wants to continue to do that work.
And that is, of course, the White House Press Secretary Karine Jean-Pierre speaking to the media, answering questions about President Biden. And, of course, this comes as the AP reports that Biden spoke in a staff call. The president saying, "No one is pushing me out." There was a question asked, is President Biden considering stepping down? And the press secretary gave an answer that said, absolutely not, definitive no to that question. Let's go over now to McKee, who has the latest on the Fed minutes.
Well, the meeting minutes show that there was some optimism among Fed officials that the economy might have been reaching a turning point when they met in mid-June. The vast majority of participants assessed that growth in economic activity appeared to be gradually cooling, the minutes say. But policymakers were divided over the effect on policy and growth. Some noted there was uncertainty about the degree of restrictiveness, with most participants viewing current rates as restrictive, while some thought they might be less so because the economy's strength showed the longer-run equilibrium interest rate was higher than previously assessed. The division meant more uncertainty about the economic outlook and how long it would be appropriate to maintain rates at their current levels. Some participants emphasized the need for patience in letting policy work, while several noted that if inflation were to persist or increase, the target range for the federal funds rate might need to be raised. A number, however, suggested policies should stand ready to respond to unexpected economic weakness, with several emphasizing that further weakening in demand might lead to higher unemployment ahead. The uncertainty led to their assessment, expressed in the statement, that they needed more time to see more data on inflation and employment before they could make a decision on rate cuts. Overall, quote, a number of developments in the product and labor markets supported their judgment that price pressures were diminishing, the minutes say, and they expected that to continue. The minutes, however, contain almost no mention of the May CPI figures released the morning of the Fed meeting, which showed a drop in price pressures. Only that the May CPI reading provided additional evidence, the minutes say. There is no mention of whether anyone changed their forecast because of it. So now the focus shifts to next week when Chairman Jay Powell goes up to Capitol Hill for his semi-annual monetary policy testimony.
All right, Mike, thanks a lot. Really appreciate that. Thank you for breaking down those minutes. Bloomberg's Michael McKee joining us. Also joining us now is Kathy Bostjancic, chief economist over at Nationwide. Those standouts, several say the unemployment may rise if demand weakens. Still waiting for additional information to gain confidence to cut. Kathy, what did you learn in the minutes?
Hi, Alex. Happy to be with you. I think the minutes were a little less hawkish than I had suspected. Remember, this meeting was back in the middle of June, and it seems like a long time since then. We've gotten data that have actually moderated. Some people are concerned that maybe it's even slowing more quickly than would be consistent with kind of a soft landing. So they are dated, but I was surprised that there wasn't a little bit more hawkishness. There was some talk about maybe rates aren't high enough and they don't have enough restrictiveness in monetary policy. But I think overall, it sort of started to set the tone. I think that if the data continue to weaken, that rate cuts are still squarely on the table for this year.
And I think it's a good point you make that we've had data since the FOMC meeting that may change people's take. And the June dots feel kind of stale already because of the data that we've gotten since. As we look at the White House Press Secretary answering questions from the media about whether President Biden is going to continue to stay on the ticket this November, I'm curious to hear from you what you think the bigger risk is, the Federal Reserve and how it chooses to proceed with rate cuts or not, or election risk.
So I think that, if you go back over, different time periods and different administrations, whether Republican or Democrat, generally speaking, the economy, the equity market are pretty agnostic, whether it's one party or the other. What really drives things at the end of the day is the strength of the economy. So I would be more, I'm not trying to diminish all the uncertainty around this election. It's quite high. But I think, generally where we go with inflation, what's how successful can the Fed be to get a soft landing? Do they take, high interest rates too high for too long and, we tip it and we get in a harder landing? To me, those are more significant, certainly, at least for the next 12 months, even going into some new administration. It will take time for any new policies to come on board anyhow. So I would say for now, we kind of got to focus on what we see and what we hear. As Michael McKee mentioned, we'll hear from Chairman Powell next week before the Senate and House for the semi-annual address. I think that's going to be, much watched TV.
All right, Kathy, we appreciate your patience. We appreciate you joining us. Thank you for the flexibility. Kathy Bostjancic joining us, chief economist at Nationwide. We do have that breaking news. You have the press conference underway with the press reporter, with the White House press secretary, and this comes as AP is reporting that President Biden said in a staff call that no one is pushing me out. Joining us again is David Westin of Bloomberg, anchor of Wall Street Week. When we tuned in to Jean-Pierre's press conference, the first thing we heard was the litany of reasons as to why President Biden did not show up at that debate last week, which to your point was exactly it. When you have a myriad of excuses, it starts to look a little bit too defensive.
When it takes you 4 shots to get to what the answer is, it's sort of complicated. And it's been a problem that they had from the beginning because they got behind a little bit on the story. And then once you get behind, it's a little hard to catch up. She also confirmed what the AP said, that President Biden is absolutely not considering dropping out. I mean, you're looking at some people with some pretty hard jobs. First of all, Jay Powell's got a pretty hard job right now. But also Jean-Pierre has a hard job because what they've got to do is try to stabilize this situation. It's almost like a takeover attempt when a company gets in play. Once it gets in play, it's really hard because the press runs away with it. And right now, they've got to stabilize it. On the one hand, they've got to persuade people they're taking it seriously enough that they're really paying attention and they're really considering various alternatives. But they've got to stop the notion that, boy, we're going to hear in the next 24 hours he's out of the race. It's a tough position that they're in.
Well, after the debate on Thursday and Friday was, the moment where they kind of had to answer what was going on, there was a lot of talk about how the White House was waiting for the polling numbers to come through to see whether there was really a lot of damage done from the debate. And we have an early read. The New York Times Siena poll shows that former President Trump leaves the current president, Joe Biden, 49 to 43%. What kind of numbers do you think would be enough to convince the White House that they have to come out more definitively with something beyond he's staying in this race?
Boy, I don't know. I will say there was another poll that specifically asked, do you think he's up to the job? And the numbers for Joe Biden really went down substantially. Donald Trump was like 50-50. As I recall, President Biden was more like 27% thought he was up to the job. So that's a critical number. But also, Scarlett, if you pointed out earlier, one of the important numbers is how much money's coming in. I mean, if the money drives that, that's going to get their attention right quick.
Do we feel like that's actually a risk?
Money drying up, but not as of now. I mean, that's what they're trying to do.
Or moving more to like House races or Senate races instead or something?
Well, you got it. They're spending an awful lot of time with their big donors right now to try to make sure that they're with them, that they will stay with them throughout. By the way, in the midst of all this, if you notice, Donald Trump passed Joe Biden for the first time in the money race. They just passed he's got more cash on hand because for the longest time we heard, don't worry about the poll numbers because Joe Biden has so much more money to spend, they can make it up in the money. Now, actually, Trump has passed that as well. So they've got a lot of fronts they're fighting at the same time. But as I say, I think their main job right now is let's settle down, let's calm it all down, make sure nothing happens too quickly. Let's get through the interview with George Stephanopoulos, get through a few more days, and then sort of take stock of where we are.
Get through the next few days. I mean, before he even gets to the interview with George Stephanopoulos on ABC.
That's a long time away, doesn't it?
Yeah, that's Friday. He's got to get through a meeting with Democratic governors this evening and also some campaign rallies in some swing states. So there's a lot on his to-do list.
Yeah, there is, although he tends to do better at those campaign rallies, doesn't he? I mean, we've watched him. He's better on a prompter. And listen, he is a pro. He's been doing this for a long time. He's given a lot of speeches in the House, the Senate, Vice President, President. He is a pro at this. This is what he does for a living. And he tends to really get his energy up and be really focused on it. It's different from having to respond to questions he's not sure where they're coming from.
Yeah, David Westin, you've got your work cut out for you as you prepare for Wall Street Week because it's a very fluid situation, certainly, as the headlines come fast and furious. David Westin, host of Wall Street Week. And Alex, I really wonder, I think everyone's going to be glued to their phones this week during the holiday as more headlines come out on what's going on with the White House.
Yeah, I thought it was July 7th, right? Isn't that the George Stephanopoulos interview?
Yes, on Friday.
That's Sunday.
Oh, is it Sunday?
So
I'm sorry.
July 7th is Sunday. No, David.
They're taping it on Friday.
They're
gonna
taping it on Friday.
They're going to
They're
have
airing it
clips
on
on World
Sunday.
News Tonight, Friday night. This is the kind of stuff I know. And then the main thing is on his program this week on Sunday morning.
Okay, but so the clips are Friday, the whole interview is Sunday, but it feels like even Friday is far away in the middle of this debacle.
Yeah, and if the issue was he has too much on his plate, right, he was traveling too much or he had a cold, he's got a lot of things he has to take care of before he sits down for that interview. Is he going to be really prepping for that interview? I don't ask this to be sarcastic or anything, but, this is something where they were concerned about whether he was over-prepped for the debate.
Yep, and we were taking some of that press conference with the White House press secretary where she said that absolutely not. Biden is not thinking about getting out of the race. There's also reports from AP that President Biden is moving forward with the election and that they are still in it to win it. Vice President Kamala Harris reportedly on that staff call as well.
Yeah, there is a story on the Bloomberg about how Wall Street, however, is on alert for a Biden exit as a Trump win trades. That wagering is certainly mounting as we get farther away from the debate and closer, of course, to Election Day, which is still many, many months away. But, this, I don't know why they had the debate so early. That's a question that the White House needs to answer as well.
I mean, yeah, we'll see if there even is another one. Okay, that wraps it up for us. Yep. We made it through, have a holiday tomorrow, and we won't see you Friday, but other people will see you Friday.
That does it for this early edition of The Close from New York. This is Bloomberg. Have a great